don't want to get too deep and sound like a conspiracy theorist, but I follow consumer law. And with consumer law, it actually breaks down to if you never gave anyone permission to report to your to any of the agencies, it's illegal to be on there anyway, no matter if it's an auto loan, a mortgage. And then in addition to that, it does have to be reported a certain way, and you can opt out of having reporting. So it's just knowing the laws, knowing how to present the laws to have the information removed. So not just medical collections, you can kind of have anything removed.
What's up, everyone? This is Niyi Adewale, and I am the host of the Ekabo Home Financial Freedom Mastermind group. This group meets every Wednesday at 7 p.m. Eastern, and the members of this group are committed to achieving financial freedom while we're still young enough to actually enjoy it. So in this podcast, you're going to get VIP access to the conversations that we have about different forms of investment and ways to get your dollars working harder for you than you worked to first acquire those dollars. On this episode, we're joined by the Mastermind group, and we dive deep into credit repair, different bylaws to help boost your credit, and ways to dispute things that may be on your credit that are hindering you or holding you back from being able to go and get those loan applications for investments and things of that nature. So we start off just connecting with each other and talking about what each person is working on today. And then pretty quickly, we transition into helping one of our members understand how to dispute items on their credit so that they can move forward with purchasing a home. I was thinking about what you talked about yesterday, and I reached out to a couple people that I know, and I got, I guess, good news. Well, no, good news and bad news. So I have somebody that works and does the credit repair, and he's been doing this for about a decade. I got him through another connection I know out here. That being said, he's so busy because he does flipping and everything else that he literally is like, he's almost not taking on new people. So I'm trying to ask my contact if there's a form or something that we can fill out with just high level information so that he can review it and be able to get back and help. But you said you were meeting with somebody too, right?
Yes. So remember when we last spoke, you challenged me to, start the process of home buying. So what I did, step one was I contacted one of my cousins, like frat brothers, who does I think he sells homes basically. I think he's a realtor. He just sells homes. And so he then kind of gave me a brief summary of how the whole process works. Talking to you, I kind of already had an idea, but I wanted to see, if he was going to tell me something different. So then he told me step one was to talk to a lender. And he contacted me with, I think he put me on with like 3 lenders. And one of them was very wary about, my current status. And then he said, I'm just going to be straight. I have like a 650, 660 credit score, and I have those 2 medical bills, on my credit. So then one of the lenders was like, hey, I don't know if that's gonna, I don't know if it's gonna harm you or not. And then the other lender was more confident. He was more assertive. He was like, hey, no, that's not bad. It's not like a credit card debt or anything. It's just a medical bill. So then I was really confused. I'm like, why would one lender, say that, and the other lender is like, it doesn't matter. So I'm still trying to understand the culture of lenders and what makes one want to, go further with the process versus the other, and how much a medical bill would impact, my I guess my estimate. Mm-hmm. Yeah. So I'm still trying to understand that. I'm trying to understand how severe my situation is, if it is severe. So yeah, that's how I got it. That's why I went ahead and contacted you.
Yeah. And I think 2 things. One, you still got time because you mentioned it's like 90 days before you can go and use that
Yes.
purchase product, right? So you still got time between now and then to correct whatever it is and get an even higher score. But in my eyes, I'm kind of with what the second lender was saying, which is all lenders are going to tell you different things, right? Let's start there. So if you go to like a big bank lender, like a Bank of America, a Chase Bank, they have strict criteria. They don't vary away from it. And we're not their ideal customer, right? I'll just be frank. They're not looking really for us to be their customers. That being said, if you go to a smaller regional bank or a credit union that you may be a part of, these guys tend to keep their loans on their own books, and they will work with you and be able to talk through a couple things with you. Now, as far as the interest rates and things of that nature, it's really going to be based on that number. They can't vary from that, but they can explain some things on your credit report to still allow you to be able to get a loan and things of that nature for a house. So, for example, right, when you look at like a credit union that I got to use earlier this year, right? I'm part of Baxter. And so I used Baxter Credit Union, last year now, to purchase a house. And when I tried to go to a regular lender, they were going to charge me 20% down for an investment home. And I was going to need to pay 5% interest because that's just what the rate was going for. But when I went to the credit union, because they had access to all my files, because they had a working relationship with me, they were able to offer me a product where I put 15% down on an investment property. And they had me at like 4.25% interest, which was a lot better. Which banks were you talking to?
So I didn't even know. I really don't know what bank these dudes were part of. I didn't go directly to a bank. It's like one fraternity brother contacted me with another of his fraternity brothers. So I didn't even know what they were associated with. You know what I'm saying?
Mm-hmm.
So I'm still kind of like a novice with this whole finance game. So I was like, I don't know where this lender's even getting the money from. Didn't even think to explore their background. It's just I trusted, the person that was referring me because they had a more deeper connection with, who we were, who we had in common.
The funny thing about these lenders and the money, it's actually the money that we're putting in the bank that they're lending with, right? So they're giving us 0.01% and they're lending at 5%, 3%, whatever. They're making money on our money. That's why I'm like, hey, I gotta put this money to work.
Yes.
But the way that you can really get some numbers and start to move forward, right, is to just call on one of them to ask for a pre-approval. I don't know that you need to do that now, right? Until you're ready to make that purchase, which is going to be in that 90-day time frame, maybe within 30 days of that, or really within like 15 days of that, you can go for the pre-approval. But until then, I think you're taking all the right steps, which is to, talk to a couple people and see if you can't continue to boost the credit up even higher so that it's really solid when you're ready to purchase.
Okay. And going back to how you said you had a credit union with your job, my job also has a credit union. So I was thinking about exploring them because right now I'm not a part of a credit union. I'm only a part of Bank of America, and that's it. So
yeah, I was the same way. And literally the only reason I joined my company's credit union is because they would pay us a day early. 2 days early. They paid on Wednesday instead of Friday. So I was like, all right, I'll take that. And they had some savings.
You didn't even explore other options.
Yeah.
It's
but it wasn't until later. It wasn't until like much later that I realized like, hey, they actually give some really cool products. And the main difference, and everybody else, please feel free to comment, but the main difference between the big banks and the smaller banks is a Bank of America or a Chase is typically going to take your loan. It has to fit a certain product. You have to fit a certain profile, and they're going to sell it on the secondary loan market to somebody else. So they may, take your loan at 3% and then sell it to somebody else and make just a smaller percentage on that, but get all their money back, right? Whereas these credit unions and these smaller banks, localized banks, are keeping those loans in their books. So they want to get to know you, the person, and continue to help you out along the way in the hopes that you'll continue partnering with them on your future buys.
I mean, you definitely opened my eyes to something because, I was a bit cynical with this whole credit union thing because, again, I don't have a financial background. really sure how finance works to the T. So I think that's probably the next step I'm gonna take. I'm gonna probably just work on the whole acquiring a credit union, being a part of a credit union. I think that's just what I do.
Let's get it, man. Let's get it. I want to introduce Ehize and Selena. Ehize, would you mind just giving a brief intro of yourself and kind of what you do from an investing standpoint?
Okay, I was getting off mute. Hi, good afternoon. My name is Ehize Lee. I'm in Atlanta, Georgia. From an investment standpoint, well, just getting into the investment space. So I own my own property, actually became a homeowner shortly after graduating college. So at like 22 years old, just from, a lot of kind of forced into it because my mom really, encouraged that. But I never really entertained the investment space until more recently. So I have an investment property with my best friend for 20 plus years. And so, yeah, that's what we are doing right now. So we use it for short-term rental.
Perfect. Thank you. This is the right space for that. I can tell you, we got a couple people that are considering short-term rental and a couple people in here that are doing that. And Selena, would you mind giving your background as well?
Hi, everyone. My name is Selena Gibber-Hewitt, and I am Ehize's business partner, as well as best friend. And we have that shared unit with each other for the short-term rental. And then in addition to that, I own 2 other properties in California, one in San Diego and one in Los Angeles.
That is awesome. Welcome. I know we had a conversation on Friday briefly around Airbnbs and different, strategies you can implement for short-term rentals. Any other questions or thoughts that you have from that meeting that you didn't get to ask them?
I know after that meeting, we did begin looking into more in depth into CRMs. So there's 2 that we're looking at. The one that you recommend, is it Hospitable?
Hospitable.
Yeah, and then Lodgify. And so those are the 2 that we are looking in. We haven't actually pulled the plug yet, but we have it mapped out on our calendar. I think by the end of this month, we'll
Splendid.
try one out.
Splendid.
The event space different than peer space?
It's one in the same. Peer space and Gigster are both renting by the hour, right? So you got your long-term rentals, which is somebody that comes in, they rent month to month. That's what everybody's kind of used to and understands. You've got your short-term rentals, which is people coming for a couple of nights, almost like a hotel. And then you got your really short event type spaces where you can list your homes even on peer space, on Gigster. And I've done this as well for some of the homes that we have listed. And people will want to do a birthday celebration. They'll want to do a baby shower, especially after COVID. It's a good way to generate a lot of income in a short amount of time.
Yeah, Selena and I actually had our first peer space booking on Saturday, and it went really, really well. It was a birthday party for 6 hours. And so we do list it for $100 an hour. So that was our first experience. We were kind of scared looking at the cameras, but it actually turned out pretty well. I don't know how many people were there, maybe 20-ish people probably. But they left it really clean. We actually gave them the option if they wanted to add on a cleaning fee or take care of the cleaning themselves. And if it wasn't clean, to standard, we would have just charged them on the back end. So I think putting that onus on the guests helped as well.
Nice.
I think that's the most genius concept possible, because one thing that I feel like is kind of unfair is when these Airbnbs still force you, and these spaces still force you to clean, then still charge your cleaning fee. Like, why?
It's true. And I'm not gonna lie, I'm one of those people, right? So the Airbnb, I have specific checkout instructions. Hey, take this trash, put the stuff in the dishwasher, and there is a cleaning fee, because I still gotta have my guys come in there and make sure everything's good. But I do love giving the option, especially on a peer space, because you're making so much more on that hourly basis as opposed to for a full day, full night. And so question for you, Ahize, when you guys did this, did you station somebody on site? Because I know you can have like a property manager stay there during the time, or did you allow the guests to kind of have that space?
No, we allowed the guests to have that space. And we have cameras on the exterior of the home, so we can see if need be. So no, we allowed them to do that.
Okay, that is fair. That is fair. John, kind of switching gears. It's been a minute since you were on, but I know you had some aggressive goals for this year, both from a real estate perspective as well as in a financial services perspective. Has any progress been made to date? What are you working on?
Yeah, thanks for asking. So real estate, I'm kind of putting on the back burner for some time being, outside of just doing house renovations on our primary residence. I'm going through a merger right now with my wealth management practice and another wealth management practice, with two other partners that are a little bit older than me, and they've got some more staff. So that's been taking up a lot of my time, the next probably 6 months to a year, really just focusing on refining client base and improving my business, which would be my main asset, and then looking to collateralize that or sell shares of it in order to possibly fund some other real estate ventures.
Okay, that is fair. You said you're going through a merger. We literally at my W-2 just purchased a company, and I can tell you that my calendar has gotten filled up with all these invites. So I know it's a fun time.
Yeah, attorney meetings and team meetings and other team meetings. It's a good time.
Absolutely. So going back over to Radim, what are you working on nowadays, man?
I'm sorry, I'm just coming out the barbershop, but I was hearing you. I was tuned in.
Okay, you got the fresh cut.
Yeah. I was working so hard, man. I forgot my birthday was yesterday, but my barber don't cut until Wednesday, and I had a whole woofing session. I don't go nowhere. No problem.
Yeah, you had the Sunni or what? You had the Sunni growing out or what, man?
I had a puff on my head. I'm like, dang.
Hey, happy belated. Let's not miss that. Happy belated, man.
No problem. Yeah, but I'm still just working on getting these two projects out the way. I'm pretty much doing a full rehab on both of them. So my targeted date was just trying to get this event space and this rooms and these apartments and everything together, at least in the next 3 months.
Fair enough. I'm in a similar grind mode. I can tell you that, and Marcus, are you on?
Yes, I'm here.
Perfect. Okay, I was just asking you about a system before, but I'm gonna come to you in a second. So I can tell you that Marcus knows, working to get this property up and running. So one of the cool things with building out systems for your own Airbnb and for your own business is you can start to leverage that and work with other people. For example, when I started earlier last year, I purchased my first Airbnb, and I was like, hey, let me check this thing out. Let me see if this is gonna work out. And it did. And from there, I purchased my second, and then I started using systems to manage it. I now manage another Airbnb for a flipper that I partner with, and recently took on 2 more contracts, and then just signed a third actually earlier this week. So I'm going to have 6 Airbnbs, 2 of them mine, under property management using the same skills, same software, etc. And so earlier today, I was at the house just trying to put everything together, make sure we can list it this weekend. But yeah, systems. It'll open up other opportunities. And now I'm getting paid to manage more Airbnbs, which is ultimately covering the cost of my cleaning fees and things of that nature. But Marcus, so Ahize and Selena are both newer to Airbnb. They're looking to expand their business, and they're looking to take on software. They mentioned they're looking at Hospitable, which is mine, right? Which is the best product out there, by the way. And then also looking at Logify. Which one do you use?
I use Getsy, formerly known as Your Porter.
Okay. And what has your experience been like with Your Porter?
It's honestly the first one I've used, so I don't have any like comparison data, but I don't have any issues with it. I love it. It does like a automatic change every single day, like a simple change to your listings, so it always keeps it updated or keeps it at the top. They've now integrated with the August lock, so you pay a couple of cents and it will send out August lock information to VRBO owners, which is something new because it did not do that before. So I like it. It's a one-stop shop for everything. And it integrates with my pricing software, AirBNB, booking, VRBO. So it's pretty good.
That is pretty cool, actually. Every time we talk, Marcus, I learn something new. So this is one thing that I have that's an issue with Hospitable is it does not connect to VRBO. So you got to create your own links and things of that nature to get to every guest. And if you miss one, you're going to get a call when they're trying to check in. That's pretty cool. And you said they just got that piece from Getsy?
Yeah, so it always connected with VRBO, but the issue with us is August Lock does not connect to our VRBO. So anytime we got a new booking, it would never send them the login information, the keypad information automatically. We would have to manually do it. But Getsy has now taken over that responsibility and will send out the updates or the integration to your VRBO clients for you.
Okay. That's pretty smooth. That is pretty smooth, man. A question for the group, and this is just kind of putting it out here. Does anybody know any credit specialists, credit repair, loan specialists, etc., in the area?
Actually, I have a credit repair business.
Really?
I got to give you my Instagram, man. You're
This
missing
man
out on
does
a
it
lot.
all.
I'm definitely missing out, man. Hey, Marcus is a man of many talents. So let's get into that. When you look at, and Bola is smiling because this is literally a great topic. So when you look at, like say a medical bill, or when you look at, say, just something that's on your record that you're trying to get rid of so that you can purchase a house, how do you go about breaking it down for a client and helping them out?
I don't want to get too deep and sound like a conspiracy theorist, but I follow consumer law. And with consumer law, it actually breaks down to if you never gave anyone permission to report to your to any of the agencies, it's illegal to be on there anyway, no matter if it's an auto loan, a mortgage. And then in addition to that, it does have to be reported a certain way, and you can opt out of having reporting. So it's just knowing the laws, knowing how to present the laws to have the information removed. So not just medical collections, you can kind of have anything removed.
So my question to you is, I've heard this before, and someone has actually told me about this. And they told me it's like a bunch of back and forth things, sending mails and things like that. So my thing is, I'm kind of busy with time. I want to pay somebody to do it because I know you got to, tell them, hey, how do you know it's me? And then the HIPAA rule or something like that. Do you take on those challenges in your business? Like, do you help people do that?
I do, but I do not use HIPAA. I feel like that's an outdated method. It does work on occasions, but if you previously disputed anything on your credit reports, it makes it a little bit harder because it almost flags your account saying that this person is trying to get things off of their credit. And they'll look in the file and see that you've done things before. So I strictly use consumer laws and basically explain to them that you are not able to do this because I never gave you permissible purpose. Permissible purpose is the biggest one that I use, saying I didn't give you permission to report this. I didn't give anybody permission to report this. Show me where you see that or pull it off.
Impressive. So consumer report is a website?
No, it's law. 15 so write this down. 15 USC 1692, and that's just the start. But there's multiple laws under 15 USC, and most of them are 15 USC 16 something. There's like 1681, 1688, 1692. There's a lot of laws that will basically you can point out certain things that are on your credit report and say, hey, according to the law, this should not be posted. Another thing that should not be on your credit are history of any transaction. So you having utilization on your credit card should not be reported to the credit company also, or to the credit agency. So it gets kind of deep in that. I really study this stuff. So
how would I go
overboard with explaining? Huh?
How would I go about like initiating it? Like, since I have the law, how do I go about like, who do I present it to? Like, how does that happen?
Okay. A great question. The first thing, I usually don't even reach out to the credit agencies first. I usually reach out to whoever furnished the information and then tell them, did I give you permissible purpose to report this information to the agencies? You have violated the law by not giving me the option to not have this reported. So go to whatever company it is, whatever medical bill it is first. And I have your email. I sent the AirBNB checklist. Did you receive that?
To me?
I believe so. I think it was you.
And Marcus, if you have a second, you got to put your IG in the chat, man. I think this is huge. And one question while Bola's looking for that, if you were to take on a client, right? Say somebody's like, hey, I don't have the time. I need you to do this. One, what would that process look like for you? And two, how long would that take to get something removed? Would it be 1 month, 2 months? Like, how long does that take?
I never give a time frame because it really depends. But the process is, first thing I do is take a look at what you have on your credit report. And I'll give you the honest truth and say, yeah, you have a little bit more than I want to deal with, or absolutely, I can take that on. So that process is basically me sending you access to my portal. When I send you access to my portal, you basically upload some information, and whatever your credit monitoring service is. If you don't have credit monitoring services through the portal, there are a couple of recommendations of what I prefer to use. Once you upload that information, I'll be able to log in, see what you have on your credit, and give you the option, give you a price, and give you the option if you want to start.
Fair enough. When you have a minute, if you can drop your email in that chat, and Marcus, definitely want to talk to you because I got somebody up in New York that I want to put you in touch with to help with this. I think this is an awesome service, and I did not know you did that. Perfect.
Marcus too. Yep. That's what happened to me. I was trying to fight something on my credit, and I forget Lexington Law. I had Lexington Law, and they was like, I was just paying like $100 a month, but I'm like, let me start paying the lower tiers. I was paying like $30, and it was like we just doing one Experian, TransUnion, one at a time. But I'm getting all these letters having me sign stuff, and I'm like, hold on. So I bought a few books myself, and I discovered a lot of, like, I bought like two books, like total of $15. And pretty much like what you're saying, they pretty much got the burden to prove like that you did. Is it you? Is it you? And 9 times out of 10, like they get millions of complaints on a day. Like sometimes they can't respond. Sometimes these collection agencies who buy your debt, they don't have the original contract. And they do like templates where, it's just all about challenging, man. It comes right off.
And one thing about that, what's made that a lot of that stuff obsolete, the original contract and signatures and stuff, is e-signatures and COVID. So before, if they didn't have the original contract, you had 30 days. And if they didn't respond in 30 days, but they've extended the law now due to COVID, and I don't know what COVID has to do with them responding, but now they can have up to 60 to 90 days to actually respond back to you. And they can respond back now to say, we're still investigating, which buys them more time. So a lot of that stuff it still works, just depending, but a lot of that stuff is outdated. And what a lot of people don't know how to do is to get your remedy. Once they're proven that hey, you didn't supply this, or I never gave you permission. What do you do next? They didn't pull it off your credit report. They didn't send you a copy of the original contract. They didn't send you anything with your signature. What do you do next? A lot of people don't understand what that process is like or what to do next.
Yeah. No, you're absolutely right. Yeah, it's why I was just trying to do it for like I had a student loan on there, and they gave me a hard time with that. I got rid of everything else, but it was just the student loan that they just kept on there. Right. For whatever reason, they gave me hell with that. But no, that's good. That's good to know. I must give people your number because everybody asks for credit nowadays. Like that's like the thing now. Like everybody trying to get their credit report.
Absolutely. And that student loan is one that is, I call it the gift that keeps on giving, because it doesn't matter what you do, file bankruptcy, whatever, that student loan is going to stick with you, tried and true.
Yeah, tried and true. I said, dang.
And sometimes removing that student loan is worse for you than keeping it on there, even if you have a bad history on it.
Really?
Yeah.
Yes, you're removing, most people, that's the start of your credit history. So if you went to school 10 or 15 years ago and you erase that history, you're erasing 15 years of history.
Oh, okay.
So that's one of the factors of your credit scoring is the age of your credit. So if you erase 15 years and then your next credit card was 5 years ago, you as a credit age, you look like you're 5 years old. You just started, you don't know what you're doing because you erased 15 years of history. So your average age or the average number of your credit is now way lower than what it was, and it can send your score down.
The credit game really is crazy. There's so many levers that you can pull, and that makes a lot of sense, Marcus. I know one of the things I did when I was getting ready to purchase my first property is I had a little bit of credit card debt, not a whole lot, but it was about 50% of the utilization on the card because my limit was so low. And I forget where I heard it or what I was reading, but they were like, hey, just call the credit company and ask to double or triple your limit, which I did. And all of a sudden my utilization went from 50% to 25%, which boosted my credit a couple points and got me even better interest when I purchased my first house. So there's so many levers that you can pull, but we're definitely going to be in contact with you on that piece moving forward. And I got a couple people I want to send your way.
Absolutely. I'm ready.
Okay. So I want to make sure that we can dive back. Hey, Avery, what's up, man?
Hey, what's going on? How are you?
Super good. Super good. Welcome to the call. I think this is the first one that you're joining. And what we typically do with anybody that's newer is we ask, hey, you know, what do you do? And what type of investing are you in right now?
All right. So currently I am I play football in Canada, so I'm a Canadian football player. I also work with OSEG, that's Ottawa Sports and Entertainment Group, and I just help them with I'm the co-chair for diversity and inclusion for the player sector. So those are the two, I guess, things that I do. As far as with investing, I do most of my investing through my company, and that's the extent of it. That's about it.
Okay. And are you looking to get into alternative types of investing, i.e. real estate, i.e. stocks, things of that nature?
Absolutely. I was looking more towards real estate actually this off season. So, yeah.
Okay. So on this call, we have individuals that are doing long-term real estate, doing short-term real estate, and everything in between, even event spaces. That's one piece that we didn't touch on, and we were touching on a little bit earlier. Marcus, I know that you do event space, right? And Ahize and Selena actually just had their first peer space booking for an event. But can you talk through kind of how long you've been in the event space and some of the pros and cons of the business that you run? And Marcus,
I'm sorry, I was trying to find the mute button. Yeah, my wife and I, we've owned 2 event spaces for 3 years in Douglasville, Georgia. Ambient event space. My wife is actually there now giving tours. But we were able to expand during the pandemic. We had 1 space. And I think some of the pros about it is it's very passive. we're never there for the events. I don't like hanging around watching other people have a good time. But the cons are, right now we're in the middle of a pandemic, and we've been in the middle of a pandemic for a while. So we get a lot of cancellations, a lot of reschedules, despite what our contract says. A lot of people still want to do that. So that's one of the cons of it. But the upside is the return on investment is amazing, and it's minimal amount of work.
Awesome. That is awesome. It's definitely a space that I want to explore in the future. Don't know if I can do it right now with everything on the plate, but definitely want to explore it in the future. Danny, how you doing, man?
Brother, what's up?
Not much. I know last time we talked, you were crushing the wholesale game, and I think you were actually putting together an Airbnb live while on the call. How are you doing? What are you working on now?
I just left the pre-foreclosure appointment. She's really different. She's she's in pre-foreclosure. She's like a year behind on a mortgage, but it's interesting because she actually inherited the property from her parents, but both her parents passed away, and her name's not on the deed. So we got to figure out how to get her name on the deed to where she can even be able to sell it. So I just left that appointment and it's raining cats.
Fair enough. And for everybody else on the call, Danny is a wholesaler, and he's able to get a lot of these deals off market that you may hear about. Go ahead. And he's able to get a lot of these deals off market that you may hear about. So he's a good person to connect to from that perspective. So kicking it back over to John, right? So we talk about, in this call, mostly we're talking about real estate investing, we're talking about stock and things of that nature. But I know that you're in financial services, right?
Mm-hmm.
So is there anything you can share about introductory meetings that you have with individuals and kind of how you go about finances and trying to build wealth?
Yeah. So when you're saying like introductory meetings, like how I go about coordinating the first meeting with a client, or when I'm trying to get an idea of the type of investor that they are and what they're trying to do with like generating generational wealth or tax planning?
I'd say more of the latter, right? When you're meeting with somebody and trying to figure out how to grow that generational wealth and things of that nature.
Okay. Yeah. So I mean, my philosophy around wealth building is there's home run dollars, and a lot of times for our business owners is kind of the primary market we work in, and then a lot of real estate investors, the home run dollars are their business. It's buying more real estate, it's reinvesting back into their family or their primary business. It's basically the areas that they understand more than anyone around them. They understand how to get the highest ROI inside of those funds or those ventures. And that's what we're trying to fuel the most, because, you know, if clients make more money, we do a good job too. We make more money, and, you know, we're just trying to help them meet their goals there. And then we have supporting assets. So there's aggressive dollars that might be like a well-diversified stock portfolio, could be individual equities, like with some of our tech clients. Most of the time that's their ESOP programs or their stock purchasing programs where they're getting a discount for buying that stock. And again, they might have blackout periods, but a lot of times they get to buy that stock at the lowest price it's been at for 6 months. So as soon as they buy it and invest, they're typically up 40-50%. So we're trying to funnel most of their dollars in there and then rediversify into diversified portfolios that we can establish lines of credit against. That way they can set up low interest lines of credit to buy more real estate, invest back into their business or other ventures that they have, especially in the interest rate environment we're in now. You know, we'll partner with an M&M bank, and for some lines of credit, we're getting 2.25% interest rate for clients. And then when their portfolios are growing at 10, and their businesses are growing at 30 or 50, it's just a lot of leverage that we can use there. And then there's safe assets. So where are we going to have a little bucket of money that if the market is crashing, if no one's able to buy our real estate in that moment, and it's not the best time to sell, we can still fall back on those safe assets. And hopefully when the market does crash, I mean, for a lot of clients, if they're younger, it's actually a really beneficial thing because it allows them to buy in at the lowest point it's been at a very long time. And so most wealth tends to be generated during market recessions or market crashes. In and above bull markets, it's just that wealthy people tend to be more well positioned to take advantage of those opportunities. And a lot of them are alternative investments like buying real estate or other people's businesses during that time. So we kind of look at those different things. My job isn't to try to manage all of their money in a diversified portfolio because we can only do so much, especially around CFP standards and regulations. I just want them to be well positioned to be able to generate the most wealth inside their own home run dollars. And then by doing that, there's usually a good chunk of change in aggressive dollars that they want us to manage, and other vehicles like life insurance or annuities or long-term care that they just need to plan for a tax perspective from to support that, which funds a lot of profitability in our business as well. So that's my philosophy is our home run dollars, our safe dollars, and our aggressive dollars, and then passive income, volatile assets, and safe assets. If we can kind of build a nice support system there, we really just get to be doing well no matter what's going on in the market and take advantage of things around us.
And that's the key, right? Being able to do well, whether the market's going up or down. Two things that you mentioned that really caught my ear. One, the whole life insurance thing. You can talk to, a whole bunch of people and you're going to get a different answer from everybody of, hey, should you have life insurance? How much should you have if you should, or is it a scam type of deal, right? And I know there's so many benefits that you can pull from that. So from a life insurance standpoint, where do you stand, John? Taking off, your company's hat, but where do you stand on the life insurance piece?
Yeah. So, I mean, I like talking about life insurance a lot. I put a good chunk of my change into my life insurance, but there's all different types of life insurance. I mean, term insurance is really great if you're looking for a cost-effective solution. You've got kids, you've got dependents that you need to take care of. But it's kind of like renting an apartment. You're going to pay that person a premium. They're going to give your family protection in the form of death benefit. And if you don't die in that period, you don't get any of your money back. And, it would have been a cost or an expense, but an important one. Then there's whole life insurance, and there's different variations of it. There's universal life, variable universal life, index universal life, and traditional whole life insurance. So the one I do not ever mess with is indexed universal life. And the reason is a lot of people will sell that as a 7% rate of return policy inside a very tax efficient wrapper. But how those contracts work is, 95% of that portfolio, I can probably turn on my camera here. 95% of that, the premiums have to go into the company's general account, and the general account of insurance companies legally has to be invested 80% of it in fixed income assets. So when they're quoting a 7% rate of return and 95% of it has to be in safe assets generating a 4%, they have to get that delta, the 5%, through an options trading strategy. And that would mean that options trading strategy would have to consistently receive a 40 to 45% rate of return to bring the ultimate rate of return of that policy up to 7%, which is just never going to happen because options are typically zero-sum gains. Some people out there are very, very good at option trading, but when you're paying a company.
All right. And that was the episode with the Mastermind Group. I hope that you found value in that. If you did, please go ahead and hit that like button and subscribe or follow this podcast so that you can get updates whenever we release an episode, which is every Wednesday. We truly appreciate the support. I hope all of you have an awesome week, crush it, and we'll see you here next week.